Good morning and thanks so much for tuning into the trade setup with me, Niraj Shah. It's an important day of trade because Indian markets shrugged off any kind of fears that might have been there in the minds of people, and I think that to me was the telling point of trade yesterday. But the US markets were quiet. I mean, nothing too untoward. The futures currently just about flattish, so no big changes there. I think global markets are on tenterhooks a little bit simply because of the Middle Eastern situation and possible flare-ups, judging by the headlines floating around. Asia, though, is not seeing some of that because Nikkei at least is not. Coming back from the holiday, the Japanese markets have really shown up in trade. So what's the global news flow? Clearly, by virtue of the fact that Japan has done what it has done, it forms a part of my top headlines. It's leading the gains in Asia as the Nikkei climbed over 2%. Safe haven demand has lifted gold to the highest in 10 days. So gold is higher. Crude prices are higher too. WTI was up 4% and settling around the $80 per barrel as West Asia tensions stay in focus. Amongst other things, while everybody is looking at China, General Motors has cut China jobs as it resets in the world's biggest car market. This is big news because what global automakers do in China might well have a bearing on their presence in China and Europe and Chinese car presence within that whole landscape. So important to monitor as well. From an Indian perspective, I think what was really important to monitor was the inflation data. So CPI inflation moderated below expectations to 3.5% in July from 5.1% in June due to a favorable base effect. Now, what has gone behind this? The price downticks largely offset the higher momentum in food prices and higher telecom prices. Frankly, this was the main culprit, if you will, in any kind of an uptick, because if you leave this out, and let's move to the next line, price pressures remain low across most categories. In fact, all categories aside of telecom, underscoring stable underlying inflation to my mind. Now, what does Nomura have to say about this? I look at what Sonal Verma or Pranjal or Sajid would say about this very effectively. So, Nomura team says that the high frequency data is pointing to lower food prices alongside a favorable base coming up. Now, what this might do is they expect headline inflation to moderate to circa 3.2% for the month of August, which is great, which undershoots RBI's forecast, and they expect CPI inflation to average about 3.8% in quarter three. Quarter three is the current calendar quarter three, so Q2, which is July to September, excuse me for that. Now, the point is the inflation may well rise after that, but this keeps the October policy alive to my mind. So therefore, while a lot of people say that post-September Fed cut, assuming that the Fed cut happens, RBI will still not move in October, maybe move in December. Bankers would desire that, but I think the policy stays firmly in focus, so that's to be watched out for. Now, trade setup for the day very quickly. Bias is towards upticks unless the global sentiment soars because of what happened in trade yesterday. I think I mean, if I was a trader, I would position myself for potential upsides by virtue of the pattern of trade that we saw in trade yesterday as well. So that's the first point. Though one eye should be kept on geopolitics, as crude upticks may impact the sentiment. They will, of course, impact what happens to oil upstream. And yesterday, after the favorable news flow on ONGC and Oil India, remember, higher pricing for new gas is notified, which is a positive. And I think from what I figure, I was looking at the brokerage notes. Jefferies, for example, raised the target price of ONGC to 420 from 410. So watch out for oil upstream, by the way. I'll also keep an eye out for PSU banks because today some of the PSU banks may see some upticks. So that's one thing that you got to watch out for. Always favorable base effect, etc., brings about some bit of this thing. So keep an eye out for these as well. Okay, let's move on to specific stocks aside of ONGC, Oil India. And actually, sorry, I've missed out on one thing that I do want to mark if I can, and which is the Adani Group stocks. Now, a standard disclaimer, of course, that the Adani Group owns NDTV and you're watching this piece on NDTV Profit. But what I do want to mark is the delivery stats for some of the Adani Group stocks. Yesterday, 2,000 crores delivery value marked for the Adani Group stocks. Adani Enterprises delivery value was 800 crores, 3.3 times the monthly average. Adani Power, the delivery value was 650 crores, 2.4 times the monthly average. Adani Ports delivery value was 382 crores, 1.8 times the monthly average. Similarly for Adani Energy and Adani Wilmar, 1.16 and 1.5 times. So in some sense, there was delivery-based buying seen in some of these stocks, part one. Part 2, the MSCI review has some material changes. And before I get to my set of stocks, just keep an eye out for some of those. One, in the Adani Group, the embargo for reviews has been lifted. And this might be very positive for some of the Adani Group stocks. So Adani Energy Solutions, for example, the street says, or people in the delivery rooms say, that Adani Energy Solutions, after QIP, the weightage could have gone up. But it wasn't, because it was the reviews were embargoed. Now that embargo has been lifted, you might well see some actions, additions, deletions, what have you, or weightage upticks into any of these stocks, or weightage downticks into any of these stocks, depending on the action, of course, from the next review. Might be construed positively as well. So keep an eye out. I again want to lay out the disclaimer that Adani Group owns NDTV and you're watching this on NDTV Profit. But what is news is news. The other piece on MSCI, before I get to my specific stocks, is HDFC Bank. Viewers, HDFC Bank is important. Vodafone Idea is important from MSCI review, but HDFC Bank in particular, because the increase on weightages was due to happen in 4 tranches maybe. Now MSCI is, because that's what FTSE had done, MSCI has decided to do it in 2 tranches, so slightly bunched up flows, if you will, as opposed to spread out flows, which might be construed positively. Watch out for HDFC Bank today. Now on to some result boys. I was talking about Vodafone Idea as the first one. Let's move very quickly through some of these, paucity of time. In Vodafone's case, revenues in line with estimates. I think the EBITDA numbers were largely, or margins were in line with estimates as well. The loss number was much lower than what was anticipated, and I think that's the big thing. 7,631 was the expected loss, 6,432 is the arrived loss. So I would reckon that the street, this coupled with MSCI, might take it positively. So that's Vodafone. Campus, no such luck. I thought weak numbers. We know Bata didn't do well. Campus not doing well too. Margins came off. PAT came off. So very likely may not do well. So that's the second one to keep an eye out for in the session today. Then Hindustan Copper, very good set of numbers, but the outlook not that positive, by the way, keep in mind. But the numbers, look at that. 103% uptick in EBITDA. Margins did very well, better than estimated as well. And the profit after tax numbers are up a whopping 140%. So very strong numbers. Could see an uptick. People have started buying in the metal stocks, by the way, across dealing rooms. So that's to be kept in mind. I was at the MK conference yesterday. Most people are talking about metals as a pocket. But this one has said that Q2 may not be the best. So that's to be kept in mind. Okay, RCF, weak numbers. Revenues were up 8.7%, which is fine, but margins wobbly. And as a result of which the bottom line number 84% down. How is it that the stock will not react negatively? I don't know. So watch out for this one. Then DOMS actually did well. Revenues were up 17%. So those were in line with estimates. But margins, 319 basis points high, 19.55 versus 16.35. As a result of which the bottom line number 50% higher. Very likely could react positively. So watch out for this one in the session today. Then Ingersoll Rand, small numbers. Revenues were very, very flattish. But I think the margin performance was strong. 26 versus 23.5, as a result of which bottom line growth better. So watch out for this one too. May react slightly, if you will. Watch out for Senco Gold. Again, revenues missed estimates, but margin performance strong, 7.8 versus 5.2 on that base, from 5.2 to 7.8, as a result of which net profit up 82%, could react positively. So watch out for this one. Ami Organics, weak numbers, goes in line with all the other chemical stocks, or most chemical stocks. There were 1 or 2 which did well, but Aarti and Deepak Nitrite, etc. But otherwise, most have had an issue. So the numbers didn't live to be desired. So let's see if this one has a bit of a correction in the session today. DCX Systems, revenues were down 19%. EBITDA loss versus an EBITDA number, and as a result of which net profit down 70% at 3 crores. Should have been one-off anomalies which led to a profit in the first place. So watch out for this one too, may react negatively. Olectra Greentech, revenues very strong, but bottom line number weak. Margins wobbly, came off quite a bit. Should react negatively because it's a very expensive stock. So watch out for this one in the session today as well. And last couple of names, NMDC, revenues were flattish, but margin performance strong, bottom line performance as a result strong, much better than estimated, could react positively as well. So that's to be watched out for. And lastly, just a couple of newsmakers before we get ready, before we wrap up rather. JSW Steel is buying interest in a coking coal mine. So that stock might be active. Brokerages have given a thumbs up to this. So keep an eye out for JSW Steel in the session today. Keep an eye out for KPI Green because there is a QIP and the pricing is at 983, the floor price, so much lower than estimated. Let's see if KPI Green has a successful completion, then may do well. And listings today, First Cry 12.2, but Unicommerce Solutions 168 times was subscribed. The listings today, Unicommerce could have a good listing, so do watch out for this one. So MSCI, inflation-led benefits coming in, and just the pattern of markets yesterday tells you that the market has a bias towards the upside. Unless the global geopolitics situation changes, I would reckon that there is optimism in the markets currently. Thanks so much for tuning in.